What's up, everybody? Ted here with some bodies and wicks. Uh, that thing that we call a candle has a body and a wick. Sometimes a tail, a big tail. Looks for a stop hunt. Anyway, I hope you guys are having a good day. It is what I don't even know what day it is. I'm on vacation and I've done nothing but look at charts and it's starting to get cross-eyed, but it's been fun and a lot of learning, a lot of back testing, a lot of doing things, and so that's why I thought this would be a good one to do. This what we're gonna do ZCash today. And if you don't know, this is a smart money channel. And what does that mean? That means that we basically believe the opposite of retail. So, where you think, support and resistance would normally be, or, we don't trade off trend lines, there's no harmonics there. We don't look for channels, no trading any kind of geometrical shapes, triangles, pivots, bull flags, bear flags. All that's there just to distract you. Smart money is basically understanding that the everything's an algorithm. The algorithm is built into the chart, whether you want to believe it or not. The only thing is that there's not a whole lot of data in cryptocurrency to support this. But there's starting to become some, and there's enough for me to show you at least. But I do know that I've been learning from a mentor. We do it through Forex. We don't even touch crypto. I think I'm the only person I know of that actually tries to teach smart money with crypto involved in it. And we know that since it is an algorithm, Price wants to do two things, and those two things are looking to balance and looking for liquidity. And what liquidity is, liquidity is the area to where you're going to have your limit orders, basically. Any kind of order that would trigger your money to start ticking, in the market, whether it be a sell limit or a buy limit, or a sell stop or a buy stop, or even a market order. There's areas in the market that is what Price is attracted to. It's attracted to those areas, and then once it hits those areas, there are things within the algorithm that the market does, and I'll try to explain them the best that I can. And this one's going to be kind of basic. Going to be back to the basics on this one. Because this one actually has a lot of stuff to look for in it anyway. Or at least not really a lot of stuff to look for, but it keeps going back to where you would, or smart money with the way I would teach it, or any smart money teacher should teach it, would go. And that's about breaking market structure. What happens when you break market structure? What do you do? How do you get the best trade out of something like that? And we're going to be looking at that in a bullish scenario. So let's go ahead and go on over to ZCash. Here we go. All right, so I'm not even in here. You know what? I need to do something real quick, and there we go. Made it just a little prettier for you guys to look at. Well, this is ZCash now on a 1 hour basis. This is what we're gonna get to, and this is what we're gonna try to figure out. But for now, what we're gonna do is I'm gonna take you back to the monthly, and we are gonna take a look at ZCash of all time, of every single time. Can you imagine owning ZCash at $2? Wouldn't that have been awesome? I mean, it same thing as being like, man, I should have bought Bitcoin when it was like $7,000 last year. Well, we could have bought Bitcash at, or sorry, not Bitcash. Could have bought that too, but you know, it's like what's $500-600. But you know, instead we could have bought ZCash at $2, and then what was the high on ZCash? 875 going once, going twice. 875 sold. And can you imagine buying at the top of that? My belief is nobody did. That was all part of the algorithm. It was new. It was something to buy. It was probably on Coinbase, so people were just like, hey, let's just buy this thing called ZCash. As you can see, it's opening months where, you know, we have the hammer, and then, you know, we have the next candle, which is just one with a long tail, almost like a kangaroo tail, but and then a huge wick on top. So anyway, so what I wanted to get to was this area down here. So we could forget all of this. I mean, I was looking at every single candle and to see if there was a fair value gap. So fair value gap, 3 consecutive candles. If there is basically a gap that's left between from one candle to another, and it leaves kind of a void in one of the candles, that would be a fair value gap. Actually, well, I just found one. I didn't realize that. You know, I'm gonna find like 3 now that I done that, but I swear I was looking through this earlier and I couldn't find any. But what fair value gaps do, and how they serve importance, is they're basically like a magnetic force. You know, once one is created, it will eventually pull back to it, and then as soon as it hits it, it'll bounce back out, and then eventually it'll cross it. But it's one of those ones you have to watch. Anytime that you're doing charting, always try to, especially if you come across a new one, mark out a fair value gap, whether it is 5 minutes or a month. These things will come in handy. Price will come to them. They will either blow right through them, or they will be your saving grace, and you can trade off of it and you won't even realize, because it'll just, you know, you've seen price just come out of nowhere and just stop and then turn around and go the other way, and you're like, oh, what happened? You know, it's not people stopping buying and all of this, or stopping selling and all of a sudden buying again. It's literally the algorithm, and there's probably a fair value gap in there that it hit and it bounced off of, and it's going the opposite way. So as you can tell, what I'm telling you is basically nothing that you've ever heard before. Probably if you've ever done retail theory. If you want to do retail theory, that's cool, that's fine. But if you want to learn smart money, I suggest you stick around for about the next 15-20 minutes, see if you can learn something new, and maybe you could put this in your arsenal of how to trade and basically what the big players do, because this is what the big players look for. This is what the institutionals look for. This is how they trade. Right? They're not going to trade like you because they know what you're going to do. Right? They know that if you think something that looks like support, then you're going to buy around that area. They know that. So what are they going to do? They're going to push the algorithm around and they're going to sell. They're going to sell right through it so they can make you lose money. And just like when everything recently just happened, made all these huge highs, and then all of a sudden everything crashed. That wasn't because everybody took profits and sold. It was because it was part of the algorithm. There was an order block back around where the time that I'll talk about Bitcoin here, back around the time that Tesla announced that it was not going, or it was going to be accepting Bitcoin, and put Bitcoin in its treasuries. That day had a big fair value gap. And it didn't scare me, but I knew eventually price was going to come back to it. And I kept telling my friends, I said, just wait. I said, price is going to come back here. And my target for Bitcoin was personally anywhere between 55 and 62. So I took my profits at like 58. And then at, of course, 65 is when it hit. And I just waited until it fell, and I bought back in at 35. So because that was below the fair value gap at where the Tesla thing was. So that's just a quick rundown of idea of what smart money is. So here we're going to go through market structure breaks, and what to do next. Okay, so for the monthly here, as you can see, we have 1, 2, almost a third. So it's kind of creating this resistance line that's kind of fakeish, of course, but it's creating an area where there's liquidity above, right? So above here, where I put liquidity / resistance, is where probably a bunch of people have sell limits just below and buy stops just above. Sell limits just below because they think it's going to come here and then sell off, and then buy limits above because some of them think that they're going to catch a breakout, so they think it'll break off and take off, or that it'll break up, come back, touch as support, and then continue on. Usually whenever you see this, you'll see that smart money will actually take it zigzagging through that area, because it's going to take both sides of the market's money. But we'll get to that when we get to that. So what I did is I drew out some swing highs, right? So at a swing high here, which actually ended up becoming an order block, and then we have a swing high here. So now that this swing high right here has been broken, right, and we have this low here, what you can do, take your Fibonacci, and this can be done on any time frame. So and this is why I'm doing it on the monthly, because there's a lot of this in the monthly, right? So whenever you're seeing the price go along, and you have a swing high and it breaks the swing high, you wait till it makes its final high and starts breaking down. Once it starts breaking down, your eyes should automatically go to the last candle that made your last bearish candle, basically, that was pushing down. In this case, your last two, right? Because both of these candles could technically be one because they fit inside of each other. They have little wicks, little tails. If you put them together on a 2 month, if this was a 2 month basis, you wouldn't even notice that this was a candle. So, but actually, we're going to be using just the 1 month for this one because that's what it's going to react off of. So, it moves up here. It breaks the market structure, so your eye turns to the last candle that was at the bottom of this, that came up and broke that market structure, right? And so here you go, you're looking at this is your order block, right? So what you want to do is take your order block and I'm going to draw a line. And guess what? So now that you've drawn your line, what you're going to do is wait for come cross that line. And more than likely, as you can see, it didn't get too far past that line. And underneath it, it didn't get anywhere close to actually dipping below it. So this is where you would want your trade to be. You would want your trade to be at this order block. More than likely, you would want it at the body rather than the wick, just because that's where most of the volume is, and that's more than likely where it's going to trade at. So as you can see, this candle right here was the one that actually pierced through it. The rest of them, I think, barely touched it. And let's just be very accurate here and make sure that these prices are dead on. That way we have a straight line. Yeah, okay. So as you can see, put a line across from that body, and then you can put a buy limit at that line, maybe just above, and it should be around the 62% or below. Either at it, you'll probably see them at the 62, which is the 61.8, or the 70.5, the 79, and the 88.6. I would say if you never did a Fibonacci before, this is what I have on mine to try to catch these kind of incidences, because you don't know where this is going to come. So what I'll do is I'll just put like a 1% maybe, especially if it's monthly and long term. I've never traded long term. I'm usually a day trader, sometimes short term position trader. But if I was going to do monthly, I would do something like, 0. Maybe not 0.5, maybe just 0.5% of my equity and 10% of my equity. That way you have a lot of room to play with if you're going to be day trading. Or you could go even bigger and do 1%, of your entire balance or whatever you have in your account, and 30% of your equity, because then that still leaves you with room to day trade, make a couple trades a day, or not a couple trades a day, a couple trades a week. You wouldn't want to do more than a couple trades a day if you did that much. If you did 1% and left 30% equity. But either way, comes back down. hits this area, boom, moves up. What does it do? It breaks this part of the market structure. So what do? You move your Fibonacci again. Where do you move it to? The low it created, which that is the low it created before it broke the market structure high. And then now you go to the next high. Okay, you can see it didn't come down too far. So we're gonna go, didn't mean to do that. We're just gonna go to, we're just gonna go to the high. And let me, on that, there we go. And come on now. All right, come on, man. All right, so now since this is the low, it went all the way to the highest high. Where do your eyes turn? To the last place that made the low, right? So that would be this candle. Here's your fib. There you go, right there. 62% again, right? So except for this time it went a lot deeper. So here's where you could scale off profit. So you could do 1% and then 2% at your 70.5, and then 3%, or maybe 2.5% if you're not comfortable with going with 3%. Or you could do 1.5, 2, whatever. Just make sure you could put limits on each, right? And your stop loss is going to go below the 100, right? And so now that we've hit this, I would personally, right now, I'm sure smart money was actually buying right here. As you can see, like I said, 88.6 was one of those numbers. And it's the purple line, came right to it. So I guarantee you smart money started stacking up right there. And it pulled up. It still hasn't pulled up over the 60%. So, and then it pulled back down again and went to the 70.5. Again, another area probably of accumulation where it could continue on higher. Could. Best, that's all relative. We don't know if that's going to happen, but that was the lesson here today, is what to do whenever price breaks market structure, right? Now there's some other lessons in here I can probably teach you about. I think if I went to daily, let me see here. What was that I'm gonna talk about? Oh yeah, the liquidity highs. So of course this one didn't break market structure until here, right? So this one came up here, made close to those equal highs. And even with the monthly, as you can see, this is where those monthlies were, right? Those monthlies pulled down to here. Here's that 88.6. You can't tell. Actually, there's an order block right in here. But there's also another one right here. So let me go ahead and delete this. So here's short term what would happen if you broke that area. So short term instead of long term. So we're going, well, not shorter term instead of month, we're going daily. All right, so daily, we're looking at the lowest low to the highest high. That is your dealing range right there, right? So boom, comes up. What do, you look for the last down candle before it goes up. That would have been this red candle right here, or these two candles actually, since they're consecutive. And they would have fit inside each other, they're technically considered the same candle in this scenario. So now what do? I would draw a line personally. Trend line. Here it's got a magnet on it. And now you can tell. There you go. Now you have another bullish order block that it's going to come down and hit. Now, if you don't know if it's going to come down and hit it, then you could just, place limit orders. That's what I would personally do. Place a limit order at 62%. Make sure you could probably at least get in the trade, because it could just come down and maybe use the top of this as support, right? And then go up, or then do the next one, right? So the next one would be 70.5. You could use that one as an entry level position. And then if you really wanted to try for 79. If you wanted to try 88, you could try 88 too. And then leave 88 there, because guess what? It still came down to 88. So, that's short term. Let's see. Now, what I think I wanted to do was actually get into the 4 hour. Yeah, this is what I wanted to talk about. So, now that we've made the highest high, and it's coming down, now you're asking yourself, okay, we've broken, here it is again. We've broken market structure, came all the way down, right? Right here is where we break the market structure from this high over. So this is the high I'm looking at. Probably should make it more to the center. This is the high. Does this, comes up, we break up market structure, look at the last low. What does it do? Drops all the way down. Boom, you can buy then, right? Of course, I would probably have, generally the rule is, don't want to trade anything below the bottom of the fib, but I would say personally give yourself 30 pips at least. If you're gonna do the bottom of the fib, that's more for like day trading kind of thing. Right now we're looking at 4 hours, so this is gonna be more, mid to long term, probably a couple days that you're gonna look at maybe for trading, or you could be just scalping, because this is where things start to turn, right? So, again, like I said, it came down, hit the order block. You could buy, even though it did go down a little bit further, you could still make money on the way up, take profits, take partials, whatever, and then follow up with, placing your stop loss at where you broke even, and then just wait. Eventually it'll probably come down and hit it. You get knocked out, whatever. As long as you took profits along the way, then you won basically. So, right, to me, in my eyes, I won, because especially if I left myself enough room for a stop loss for that kind of drop. I'm sure that was some kind of heavy day to where we had some, high volatility. Maybe there was something about the Fed or something like that, and it causing, crypto to do something crazy. But so now we're going to talk about, well, what happens whenever, I guess we're not really breaking, bullish market structure anymore. So at that point, you just kind of have to look and see why you're not breaking market structure. And for this example here, I noted that instead of a positive order block, that you would have just like this, that you drew a line from here to here, then you would trade based off that going up. Instead, here you have the bullish candle, then you have the bearish candle overtaking the bullish candle, and then when it comes back up into that area again, that becomes an order block as well. Negative order block hits it, that could be a trading area to go short. And then now you're going to see that along the way down as well. So here is one right here, as you can see, a little bit too much of a wick for me, but it still is doing the same thing. It seems still doing the same job. Let's do this, draw this over here. You can see all the candles came up to it, bounced off of it, came up to it, bounced off, and then dropped. And then here you have, I think this was a daily fair value gap that I drew. So since this is a daily fair value gap, I've been waiting for it to at least come up to it, so I can see the reaction is going to happen. That whatever is going to happen once it enters the fair value gap, because it could be one of those things to where it could get rejected automatically, or it could go straight through it. What's going to determine that is probably what's going to happen leading up to it, which is what we're going to take a look at now. So right now, ever since the big drop, ever since everybody thought the sky was falling and crypto was over, and no, we've just been trading sideways. And no, this isn't a triangle, please. I'm sorry, but crypto does not work like this. Nothing works like this. And nothing just says, oh look, we have ourselves a triangle, so therefore price is going to, I could have probably drawn a better one. Once price comes out of it on the opposite side, it's going to touch the triangle line and then go south. No, that's, price doesn't know that there's a triangle line there. What price knows is price knows liquidity. It knows where the orders are. It knows that there's 2 equal highs, right? 3 equal highs right here. That's what I would be looking at, to be honest. I wouldn't be looking at a triangle and saying, oh look, ZCash is making a triangle. Wrong thing, sorry. That ZCash is making a triangle, so watch for it to, see if it's going to exit the triangle this way or that way, and then we can trade off the triangle line. No, that's not how it works. Instead, what you're going to look for, areas of liquidity, such as this. Oh, hit the wrong damn button. Such as this, right? You got 2 highs here. Almost a third. This could almost, I could see this being like, well, this is kind of the start of the resistance area. Even though it did get above it, you know, it's almost like this was the area that was starting to push it down. But no, this is engineering liquidity, basically. Engineering liquidity to make you think that it's going to stay below here at all times. So I'm going to get rid of these triangle lines since they're imaginary, not real, not what price is looking for. And I'm going to see if we can't find what's going to happen to ZCash next. And it's also kind of doing the same thing on the bottom here too. As you can see, we do have some almost very even well, not really almost, but still. It's close enough to make you think that this would be support, right? And the thing is that we haven't cracked. We haven't cracked bullish market support. I'm watching as I'm trying to talk, so I'm thinking. I can't think and talk at the same time. It's weird. I can't multitask. I'm like Joe Biden. So there's no bullish breaking of the market structure. There's no bearish breaking of the market structure, except right here. And even then, it still comes up and you have two equal highs again. Now, this is what I fell for yesterday, and I made the mistake of seeing the two equal highs and betting that it was going to go above, and I lost. Basically lost. Instead, it went lower. So just because there are equal highs above doesn't guarantee that it's going to get above it. I can guarantee you it will eventually. It's going to come back here eventually. This is where a lot of liquidity is sitting. There's a lot of order sitting through here. But does that mean it's automatically going to come back up and try to take the market on both sides? And what I mean by take the market on both sides is it could, come up here. And I taught this, and you probably heard me say this if you watch my videos. Come up here, trigger, the sell stops, right? Sell starts running. People start chasing it. They think it's going to sell off, right? Then it comes back up, gets above the quote unquote resistance line, triggers the buy stops. So the buy stops people are happy because they're getting their fill. It stops there, then it goes below again, taking their sell stops out, while this right here, the movement up for the buys, going through the buy stops, probably took the stop losses out for the sell limit people. So now the buy stop people are going to start chasing it down, and then it turns around and takes off. So that's how it takes out both sides of the market with just one line sitting here, because it knows what retail theory is going to do. It knows what the typical trader is going to try to do. They see these two lines, they think they're equal highs, they think that this is resistance. What does smart money think? Oh, they know that retail traders trade this way. So what are they going to do? Algorithm's probably going to push it. There's going to be something happen with it. They know that they can also mess with the algorithm and push it around to take out both sides of the marketplace to make you lose money, as well as that money goes to the broker, and then that broker goes to smart money's pocket, or aka large bank accounts. They're the ones that are controlling everything anyway. So instead of thinking of this as a triangle in which way it's going to bust out of, think of this as something different. Think of this as, what are the big traders doing? What are the big traders thinking? How are they going to trade? And this is exactly what they're looking at. They're looking at something like this, right? They're not looking at a triangle. Okay, so I just wanted to bring that to your attention. Now, what is ZCash going to do from here? I have no idea, because we do have, you know, a completely sideways market that is not really broken any kind of market structure, whether it be bearish or bullish. It broke a little bit bullish, but if anything, what this candle did, and if we break this down even further and get down to like the 1 hour and see what that candle did, it probably hit an order block. Let's see. Let me here, I'm just going to put a horizontal line in the area of where that is. Come back over here. Yep, look at this. Order block right there. Let me do a horizontal line, really quick horizontal ray. There you go. There's your order block. It didn't even have to break, you know, market structure for it to happen. These things form out of, you know, will just form. But I was saying, whenever market structure breaks, that's the first thing you should be looking for. You should be looking for order blocks. Now, they do happen in other cases all the time. I wouldn't say all the time, but in quite a few different scenarios. So if it does form an order block, make sure you take notice of that. That way, when it does come back down to that area, as you can see, you could have bought here. Boom. There you go. Now, even in this sideways trading market, could have made money, right? And then once it gets here, and then you see it dips and it comes back up and it doesn't make a new high, get out. That would be me personally. Because if it's not going to break market structure after a dip, then you know it's probably going to go lower. Now here, I mean, small little market structure break, but the thing is, you know, okay, if it did break market structure, all right, look for the order block. Order block would have been, it could have been two places, to be honest, because this came up higher, went lower, could have been right here, but even then it just ran right through that order block. Well, not all the way through. It got to the bottom of it. It did shoot up, right? So it did have a positive reaction, but it didn't get above anything significant. So again, that's something I would have probably tried to just take profits on and put my stop loss at, you know, break even and move on. Or look at this one and do the same thing, you know, maybe put a buy limit on it. Because you gotta think, these order blocks are the entire length of the candle, right? So by drawing a box around this candle, I can kind of show you what happens in that. So it does hit the order block. It does have a positive reaction. Unfortunately, that positive reaction doesn't break the candle that's next to it. That would have been the first sign to tell me to get out, because it's not moving up and further away. Because what it should do, to be honest, it should actually just touch the top of the order block, and then you should see it make a bullish engulfing of that candle, of the next candle, and that way it'll continue to move forward. But if it doesn't do that, doesn't do a bullish engulfing and drops through, and now you're looking like you're in the negative, maybe try to see if you can try to get another push out of it like here, and then get out, you know, maybe as soon as you can. Because if it doesn't make a high after the first time, it's probably not going to the second time. Again, you can get out and try to get out, you know, try to break even. Don't try to hang on and hope that just because the order block is the entire length of the, you know, of the candle, that it'll get to the bottom of it and then turn around. It's probably not what's going to happen. You have to think about the order of what these candles are doing. They're slightly getting lower. There's probably not a chance it's going to get higher. So that's what I would have done. Just trying to leave that to you, and how to deal with these situations whenever you do run into order blocks that don't turn out your way. Because like I said, they do form a lot, but when it's usually whenever we break market structure is when we have something good come out of it. Here, even though it breaks faux market structure, I guess you could say, it has a very short-lived. So you could do this one if you wanted to, right? So, and even then it still doesn't really break market structure because there's this little high hanging out right here. But you probably could have put that there, got in on the 62, and probably rode that up a little. You still would have had a positive reaction almost every time that you do have an order block and it comes down. As you can see, it's almost there at the 62. This one comes down. There's a little bit of space in between. Could have got in and it still would have had some kind of positive reaction. Could have made a little bit of money off of it, maybe not much, but at least there was money to be made there, right? So and that's why I wanted to pick ZCash to kind of go through and do this with you, was to show you all the different situations that order blocks pose, and you know what to do about them whenever you run into them. So but like I said, that one, you know, with this low right here, like I said, more than likely the reason it got there was probably because of an order block. It's 100% correct. Comes down, order block, it drops down into it, and then it pushes out. So again, you know, if I would have solved this, I would have marked this forward. We had one time it got rejected, second time it got rejected. It may not get rejected a third time, right? So now we just have to watch and see, you know, how this is going to play out. And as you can see, I mean, again, we have equal highs. Liquidity is up here, but we're not seeing market structure breaks on the upside. We're seeing liquidity getting busted on the downside. So here you can see that, you know, there's a low that was formed right here. Kind of crooked, but oh well. Comes down. Well, sorry, my glasses went crooked for just a second. So low comes down. This technically is, well, let me see. Yes, that is technically considered an order block. So it does come down, hit the order block, as you can see, positive reaction, but doesn't break the market structure. So unfortunately, what happened was that there was a bearish order block on the underside. A lot of people would say, this classic support resistance. Okay, I'll give that one to you. You can think that's support and resistance, whatever. But to me, that's an order block, a bearish order block. It comes up, hits it. The bearish order block forces it lower. So as for right now, ZCash is not looking good, even though it is going up. But we'll just have to see. I'm looking for the next, and it looks like it's already happened. You have these two candles go up, but these two, bearish candles here, unfortunately, are a leeway, and these candles come up into the bearish order block, get rejected, and now it's trying to come back up. It's actually hitting the bearish order block right now, but unfortunately, nothing has happened. Yeah, I don't know for sure if it's going to get rejected or if it's going to push through. Maybe the previous push up into that bearish order block was a good thing, and now maybe we can start see some positive movement. Maybe ZCash smells that liquidity that's up here, and it's going to start moving higher. That's what I'm hoping. We do have some fair value gaps in here along the way, so it's going to be fighting somewhere around the 24. Actually, I have no idea how this happened, but I am on Ethereum Perpetual. That only happened whenever we got over to here. Anyways, let's just make the don't know how that happened. I really don't know how that happened, because we were doing ZCash for the first part, and you knew all of my markings were there, but now somehow we have turned to ETH perpetual contract. So either way, hopefully you've learned something from this, even though it's been a little bit of a mess up. There was a lot of smart money lessons in there to be involved, especially talking about order blocks and what to do. We'll just combine two lessons into one. I mean, actually, you know what? Let's finish it off with ZCash. That was ridiculous. I do not know how that happened. So, all right. So again, if anything, what I can do is I can cut that out. But you know what? Maybe I'll leave that in just in case. But again, here we go. It looks like it's doing the same thing that the Ethereum was doing, trying to create some kind of faux triangle here, and that's just not how smart money works. I'm trying to draw the perfect triangle for you guys. So, and I'm sure this is probably what everybody has on their charts as far as ZCash is concerned. No. Okay. Just no. Again, we're going to use the same, kind of thinking that we were using. Unfortunately, there's not equal highs in here. So there's really nowhere for it to try to gravitate toward. I mean, you do have somewhat kind of equal highs way back here. Just because this guy came close, got rejected, you know, people would think that this would be, you know, some kind of resistance level. Just buy side liquidity down here, nothing really that would support any kind of thing that would show that this is support. So if it comes near here, do not buy. Let's see what's to the left of it to see if there's anything to support that idea. No. You know, remember, this was the one that came down and hit the monthly fair value, or not, the monthly order block, and then got rejected. So that's why it got rejected. There's nothing to support that this is any kind of support whatsoever. So if Zcash does get as low as $87, ooh, that would, I mean, that'd be great for stockpiling, that's for sure, but not good for Zcash itself. And as you can see, even though it did create this lower low, as it was coming back up, did not break market structure. Again, still kind of an uptrend, still no breaking of market structure. Even coming down, you have this wide range, this wide dealing range, right? From here to here. All right, so what you would just be looking for is eventually for either some kind of double top to form, because even though it may not go after it right away, eventually it could go after it. But if we think this thing is eventually going to get bullish, then we have to think about where smart money wants to buy, right? And if this is going to go bullish, smart money is going to buy below the 61% level, or the 62% level. So that would be this level here, in between there and the 88.6. It's already gotten below it a couple times, and I'm sure that the smart money people did make some accumulations every time it did that, and it may be on its way up. Who knows? I mean, it is looking kind of promising. There hasn't been, I mean, it's making higher highs and not making lower lows. So that is the good thing about Zcash right now. However, it did hit bearish order block, and that's what's caused it to drop back down. So as you can see, we'll draw the line. All the way across. Gonna make it even. Boom, there it is. See what I'm saying? Don't draw triangles on these things, guys. It's not what it's looking for, right? You have these order blocks that it's gonna come up, hit into. That's part of the algorithm, and then that's what's making it back off right now. So, and we might see even more of this. I mean, yeah, that right there is a bearish order block. You can see came up into it, got knocked down. I don't think this is a bearish order block, which is why we might be able to see some kind of bullishness out of this right here. But we'll just have to wait and see. I really don't have a good prediction for Zcash. I really don't. I wish I could say I did, but I really don't. I I'm one of those people that always think that smart money wants to accumulate it at a very low level. So I think there's a possibility it could drop again, but that would entail probably the entire market dropping, as ZCash somewhat correlates with most of the market, but not always. So we'll just have to see. I think a lot of it has to do with Grayscale too, since they own so much of everything. You know, wherever the market goes and the way Grayscale goes, it's kind of what happens. It's like everything that you own. If you own stock in the SPX, you know, you're in the SPX does a certain move and it does something else, your stock basically almost reflects the SPX. It almost will do that. So Grayscale's kind of the same with you know, whatever Grayscale owns, and I'm sure they own quite a bit of ZCash. So we'll see. I've gone way too far over on this video. I meant for it to be about 10-15 minutes. It's an hour. Sorry guys, I get way too into these and I explain way too much. I need like a bell. I said this last time. But if you think I did a good job, if you think you learned something, please do me a huge favor, subscribe, click the like button, join my Patreon if you'd like. It's only $3 a month, you know, with all the subscription services and all the new, you know, everything that goes into this. It doesn't, you know, it isn't free, but you know, every little bit helps out. So just $3 a month if you want to join my Patreon, just helps the page. Eventually I'm going to start a signal service. I was hoping to have it started by this month, but I just don't think I'm there yet. So, but when I do get there, everybody that isn't joined to my Patreon will get a huge discount on all those signals. So if you wait and you don't, then you're going to be left out. I'm going to be throwing out signals, and eventually you'll probably have to pay for it and be missing out on a huge discount. So that's what I got for you guys. Thanks a lot for watching, and I would like to remind you all to do one thing for me. Always wear your pants.